I just keep getting this right. How do I keep getting it right? After calling the Fed pause on November 14th, I went on a buying spree of both silver and gold. I'm not boasting here, I'm just following the playbook. I didn't write the playbook, I just follow it. We'll get to that playbook later. How is it that I knew with such certainty that the Fed would pause and then ease that it was time to back up the truck to buy gold? Well, that's the question we're going to answer today. We're also going to look at some of the silver I got in recently. Check out this kookaburra. Ha ha ha. That's not a kookaburra. That's a kookaburra. Yesterday, December the 13th, Fed Chair Powell not only confirmed the pause, but also stated that there would be 3 rate cuts next year in 2024. The market went wild. This, of course, means higher prices for silver and gold as investors rotate out of treasuries and other investments looking for a place to park their money. It was kind of funny yesterday watching George Gammon's whiteboard take on how gold prices are set and where they're going in 2024. After running through all the possible ways to measure gold in dollars, such as against inflation, his conclusion after researching gold price discovery was, I have no idea. It was a salient and honest moment in YouTube history. Finally, someone being honest. People like to get in there drawing lines on charts and thinking that if they connect this dot to that dot, it means something. I'll help George out here. It's not like a stock. There are no PE ratios in gold. There is no price to something else ratio in gold. Prices are set by one thing and one thing only. That thing is sentiment. Maybe with a little price manipulation mixed in for you conspiracy guys. I'm a bit of a conspiracy guy also, but not a big one. The gold market is so opaque, it's difficult to get a clear picture of what's going on. Sentiment is based on some of these factors. Central banks, investors, jewelry and industrial demand, geopolitical events, and production costs. Gold cannot go below production costs for very long without causing very serious consequences. As of Q3 2023, the average all-in sustaining cost for major gold miners was around $1,358 per ounce. So there's the floor in gold price. Much below $1,400 is very, very unlikely to happen. Gold isn't like a publicly traded stock. Stocks can go to zero, but gold never can. It's the safest store of value in the universe. During the Great Depression, at least 1/3 of all publicly traded companies in the U.S. went bankrupt. We're talking about something that happened less than 100 years ago. In contrast, gold has been used as a store of wealth for 5,000 years. Now back to our question. How did I know Fed rates had topped and we'd start to roll over soon? It's simple, really. I've been following the 1970s playbook all year. That's all there is to it. The 1970s playbook. Back in May, when silver was $26 an ounce, I said that the price would likely go down to $21 before it could get to $30. That's exactly what happened. In October, silver bounced off of $21 and has been trending higher since. That's the 1970s playbook. Check this out. This chart overlays 1970s inflation with today's inflation. It's almost a perfect match with stunning precision. We're rolling over into a low inflation, low interest cycle, which will be followed by unprecedented inflation, possibly by 2026 or 27. It looks to me like the perfect storm for precious metals. Central banks around the world are dumping U.S. debt and they're dumping the dollar. Their money has to go somewhere, which is why we see unprecedented central bank gold purchases. Looming CBDCs have a lot of people concerned about not only privacy, but control over our spending and how we use our money. Suspicious activity will not be allowed. Already, banks dislike doing business with bullion dealers, and I've even experienced trouble getting payments to go through using my bank for gold purchases. The electrification of everything is putting a burdensome demand on a shrinking silver supply. Eventually, something has to break. Silver demand has exceeded mine supply for years, with the gap expected to widen. Making up for the deficit by recycling only gets you so far, and in my belief, not far enough. There's not really a lot to say about the 1970s playbook. I lived through those times. I was stacking silver and gold through those times. I don't see a lot of difference between then and now. Some would argue differently, but as for me, I'm sticking to the playbook. I put myself out there already with a $30 silver price target for 2024, with a possible range of up to $35. To get to $50 next year would take a mania, which is impossible to predict. My gold target is $2,400, with an average gold to silver ratio of 80-1. Now on to this kookaburra. It's a 1 kilo silver coin from the Perth Mint. Yep, it's actually a coin with a face value of $30 Australian. It's a coin in every sense of the term. It just happens to be a really big coin. It's very cool, I might add. It's just stunningly beautiful, with all that silver at a scale you're not used to seeing. Compare this to a typical 1 kilo bar. There's no comparison. Although I appreciate the weight of a kilo bar, the artistry on this minted coin truly brings out silver's inherent luster and appeal. It also brings a lot of wow factor to the stack. Now, these typically have a high premium, which has kept them off my radar, but there were some pretty good deals a few weeks back, so I tried not to overthink it and just pulled the trigger. Boy, am I glad that I did. This is really cool. I don't regret this purchase a bit. I hope you found that interesting and helpful. 2024 is going to be an amazing year, and I hope to see you there. Thanks for sticking around till the end. Stay safe out there, and we'll see you next time.